Please like, share, and subscribe. Wishing you happiness and good luck every day.
All right, let's get right into it. We're going to tackle one of the absolute titans of trading psychology, Mark Douglas's Trading in the Zone. Now, forget about chart patterns for a second. Forget about economic news. We're going deep into the one thing that truly separates the pros from, well, everyone else. And it's all up here. It's their mindset.
So let's kick things off with a number that should honestly make you pause. You've probably heard it before, but let it really sink in. Something like 95% of traders fail. And we're not talking about just losing a little bit of money. No, we're talking about getting completely wiped out, usually within their very first year. Just think about that for a second. We have brilliant, successful people, doctors, lawyers, entrepreneurs, who step into this world and just get crushed.
Which leads to the big question, right? The one we're really going to dig into. Why? Why on earth do so many smart, driven, successful people fail so spectacularly at trading? I mean, it's not because they aren't intelligent enough. It's not a lack of ambition or even money. There's something else going on, something deeper. And the crazy part is, the very skills that make you a winner everywhere else in life can become your absolute biggest weaknesses in the market.
Yeah, let's just call it what it is. The 95% failure problem. It's this massive puzzle that just drives aspiring traders crazy. You know the drill, right? You study harder, you buy the fancy new software, you follow all the gurus on social media, and still nothing changes. You're just stuck in that same frustrating cycle of getting your hopes up and then getting knocked back down.
And this is where Mark Douglas just flips the script. He says the answer isn't what you think it is. It's not about finding more information. It's not some secret trading system or a better way to analyze charts. The real solution, it's a total, fundamental shift in how you think. How you think about the market, how you think about risk, and maybe most importantly, how you think about yourself.
Okay, so to really get this solution, first we have to be brutally honest with ourselves. We have to look at why our own brains are just, well, they're not built for trading. All the mental habits, the things that make us successful out there in the real world, they actually turn against us. They actively sabotage our efforts the second we sit down in front of the charts.
And this right here, this is the core of the problem. Think about it. In your everyday life, you get rewarded for being right. You need certainty. You're building a bridge or performing surgery. You can't just guess. You have to know what's going to happen. But the market? It's a completely different universe. That mindset will get you killed. The elite trader, the professional, they live in uncertainty. They embrace it. They understand that losses are just a business expense, and they think only in probabilities.
Because of that conflict, we fall into all these mental traps. You know what I'm talking about. That nagging need to be right on every single trade, so you hold on to a losing position way past your stop loss? Or that paralyzing fear of losing money, so you see a perfect setup and just freeze, you can't pull the trigger. Then you get a few wins in a row, you feel invincible, and you start trading recklessly. And don't even get me started on the ghost of that last bad trade that follows you around, messing up your judgment on the next one. It's just a vicious cycle.
Let's get personal for a second. I want you to answer this honestly, just to yourself. This is a question right out of the book. Do you find yourself trying to figure out a way to trade without ever taking a loss? Be honest. If the answer is yes, even a little bit, then you're still treating trading like it's a math problem that can be solved. You're not seeing it for what it is, a game of probabilities that needs to be managed.
So how do we get out of this mess? How do we break free from these traps? Well, the very first step, and honestly, this might be the most important one of all, is a complete, radical shift in your perspective. It all starts with taking absolute 100% responsibility for every single thing that happens in your trading account.
And man, this quote from Douglas just nails it. The market is completely neutral. It's just a stream of information. It is not out to get you. It doesn't even know you're there. All that stuff you feel, the fear, the greed, the hope, the anger, that's not coming from the market. The market is just a giant mirror, reflecting what's already inside of you. All your beliefs, all your baggage, all your fears.
The moment you stop blaming things, blaming the market, blaming your broker, blaming bad luck, and you truly accept that your results are a direct reflection of what's going on inside your head, everything changes. It's like a switch flips. You go from being a victim of the market to being the architect of your own success. This idea of taking responsibility, it's the absolute foundation, the cornerstone of a winning mindset.
All right, so once you've truly taken on that responsibility, you're ready for the next level. You're ready to build the single most important mental skill that every single elite trader has mastered. This is the secret sauce, folks. This is where you learn to truly
deeply and actually use probabilistic thinking. Mark Douglas lays out what he calls the 5 fundamental truths, and you have to get these so deep into your brain that they become second nature. Let's go through them. Number 1, anything can happen. Seriously, anything. Number 2, you do not need to know what's going to happen next to make money. Get that? Number 3, for any given trading edge, your wins and losses are going to be randomly distributed. Number 4, an edge is just a probability, it's not a guarantee. And number 5, every single moment in the market is one of a kind, totally unique. When you really, truly internalize these 5 ideas, that's when you can finally start trading without fear.
Let's just double-click on that 4th truth for a second, because it is so important. Your trading edge, it is not a crystal ball. It's just a statistical advantage. All it means is that if you take a whole bunch of trades, you're a little more likely to make money than to lose it. That is it. It tells you absolutely nothing, zero, zip, nada, about what's going to happen on the very next trade. And that's exactly why needing to be right on this next trade is so damaging.
So how do you make this idea real? How do you actually feel it? Well, Douglas gives us this incredible analogy. To really think in probabilities, you have to stop acting like a gambler at the table and start thinking like the casino itself. You have to become the house.
Right? The whole point is to convince yourself that this is all just a game of probabilities. It's not that different from a casino running a slot machine. The gambler feels like every pull is life or death, but the casino owner, you think they're sweating over one person hitting a jackpot? Not a chance. They expect it. It's just part of the business. They aren't focused on any single outcome. They're focused on the thousands of pulls that guarantee their profit over time.
So what does this actually look like when you're trading? Let's imagine your system, your edge, wins about 60% of the time. So over your next 20 trades, you're expecting something like 12 wins and 8 losses. But look at how they might show up. It's totally random. You could easily start with a loss, then another loss. The gambler inside you starts to panic, right? My system is broken. But the casino owner? They just shrug. Okay, 2 trades down, 18 to go. They have complete faith that over the entire sample size, their edge will play out.
And that is the whole game. That's the professional mindset in a nutshell. The casino does not try to predict the next spin of the roulette wheel. It doesn't get emotional when someone wins a big payout. It just keeps running its game, executing its edge with flawless, boring discipline over and over and over. It knows its small statistical advantage will guarantee a profit over time. Your job as a trader is to become that casino.
Now, when you finally get all these pieces to click together, when you've got the total responsibility, you've internalized the 5 truths, and you're thinking like the casino, something incredible happens. You unlock the ability to enter that peak performance state that you hear elite athletes and musicians talk about all the time. In our world, we call it the zone. So what is the zone? It's that state of pure flow. It's when your mind and the market just seem to be in sync. You see your setups and you act without fear, without hesitation. Your actions are perfectly aligned with your trading plan. You're not trying to force trades that aren't there. You're not fighting the market. You are just calmly and objectively responding to what the market gives you. And trading, it actually becomes stress-free. It feels effortless.
Okay, one last gut check question for you, again straight from the book. Do you ever find yourself carefully planning a trade, but then when the moment comes, fear takes over and you just can't execute it? Or, on the flip side, do you find yourself jumping into random, impulsive trades that you never planned at all? If you're doing either of those things, you are definitely not in the zone. Your decisions are being hijacked by fear and greed, not by that calm casino mindset.
So how do you finally get there? How do you enter the zone? It all comes back to the big idea we've been talking about. The only way in is through a complete and total acceptance of uncertainty. You have to fully, 100%, let go of needing to know what will happen next. The moment you are genuinely okay with not knowing, that's when your mind finally opens up and you can see what the market is really offering you.
And that's really the final takeaway here. The whole journey of becoming a great trader, it's not really about mastering the market. It's about mastering yourself. Because the market, at the end of the day, is just a giant mirror. It's always going to show you exactly what's going on inside of you. So what does it reflect when you look at it? Does it show you fear, ego, and chaos? Or does it show you discipline, patience, and confidence? Master what's inside, and you'll find that mastering the market kind of takes care of itself. So have you ever wondered why some of the smartest people you know, we're talking doctors, lawyers, engineers, can be so successful in their careers, but then they step into the markets and just get crushed?
Well, we're going to dig into the classic trading in the zone to figure out why. And here's a little spoiler, it has absolutely nothing to do with being smarter. It's all about a fundamental shift in how you think.
It's a really weird paradox when you think about it. You see these people who are masters of logic and analysis in their fields, but the second they enter the market, it's like their superpower becomes their kryptonite. Their intelligence doesn't just fail them, it actually seems to make them lose even more money. It's a puzzle that has frustrated traders for decades. So let's dive in and start to piece this puzzle together.
All right, so to really get this, we've got to go back, way back. For a long, long time, Wall Street was run by one big idea: fundamental analysis. And the thinking was pretty simple, really. If you were smart enough, if you did enough homework, you could logically figure out exactly where the market was supposed to go.
And what's crazy is how recent all this is. I mean, as late as 1978, if you walked onto a trading floor looking at charts and patterns, what we now call technical analysis, people would have laughed at you. They would have called it hocus pocus. But something big was about to happen, and it was all because the old way, just wasn't working anymore.
And look, on the surface, the idea made perfect sense, right? The thinking was, if you can just account for everything, interest rates, company earnings, balance sheets, heck, even the weather patterns, you could build this perfect logical model. A model that would spit out a number and tell you exactly what a stock should be worth.
But there was this one tiny, fatal flaw in this beautiful logical machine. The models forgot the most important, most unpredictable piece of the puzzle: us, people. See, markets don't move because of a spreadsheet. They move because millions of real people with all their hopes and fears and crazy beliefs are hitting buy and sell. A lot of the old school floor traders, they barely glance at these models.
And this created what the book calls a reality gap. And man, is that a good way to put it. It's that huge, frustrating gap between the price your model says is logical and the wild, messy, chaotic price that's actually flashing on your screen. Sure, maybe your model will be right eventually, but that roller coaster ride in the meantime, it could easily wipe you out first.
So this whole should-be way of thinking, it just wasn't cutting it. The constant failures forced a revolution, really. Traders needed a whole new playbook, one that was grounded in what was actually happening, not what was supposed to happen in theory.
So what did they do? Well, they stopped trying to predict some logical future price and started paying attention to what the market was doing right here, right now. They figured out that all that human emotion, all that greed and fear, it leaves footprints. And those footprints create distinct, repeatable patterns on a chart. Technical analysis is simply the tool we use to read those patterns.
And this is what finally started to close that reality gap. The chart wasn't just a bunch of squiggly lines anymore. It was like seeing the mind of the market laid bare. And because these patterns show up on every single time frame, from a 1-minute chart to a yearly one, the market suddenly changed from this big, scary, chaotic place into an endless stream of opportunities.
Okay, so problem solved, right? We have the tools, we have technical analysis. But wait, this opens up a whole new can of worms, a much deeper, more personal problem. Because if the opportunities are right there for everyone to see, why do so many traders still end up losing?
And come on, let's be real for a second. We've all been there. How many times have you looked at a chart, called the next move perfectly in your head, and then you just sit there, frozen, while it plays out exactly like you thought? That pit in your stomach as you watch the money you knew you could have made just slip away. That feeling right there, that is the new battleground.
The book has a name for this, the psychological gap. And you can think of it like this rickety, swaying rope bridge between your brain and your bank account. On one side, you have all your knowledge, you see the opportunity clearly. On the other side is consistent profit. And that gap in between, that's where the real battle is fought.
So what's the deal? What separates that tiny group of consistently successful traders from everyone else? What's their secret sauce? I can promise you, it's not a better indicator or more screens on their desk. The real answer is much, much deeper.
Well, I can tell you what it's not. It's not about being a genius. We've already busted that myth. It's not about working harder or staring at the screen longer. And it's definitely not about being a better analyst. It's funny, right? Some of the best market analysts are just terrible traders. It's not some secret system they bought online.
The simple, powerful truth is this. The best traders haven't found a secret. They've acquired a unique mindset. It's not what they do, it's how they think.
And we're not talking about a small difference in thinking here. We're talking about a massive one. The book puts it perfectly. Think about it. The Earth and the Moon, they exist in the same solar system. They're right next to each other. They're affected by the same sun, but they are literally worlds apart. That's how big the mental gap is between the pros and everyone else.
So, if we drill down to the very core of this different way of thinking, it all comes down to one single critical word: risk. And how the pros think about it is, well, it's a total paradox.
I mean, it seems like a no-brainer, right? If you're trading, you're taking on risk. That's the whole game. A lot of traders even pride themselves on being risk takers. But what if I told you that thinking of yourself that way is actually part of the problem?
This right here is so important. See, anybody can take a risk. That's the easy part. It's just a mechanical click of a mouse. But accepting the risk, that's on a whole other level. It means you have truly, deep down in your bones, made peace with the total uncertainty of the outcome. You're genuinely okay with whatever happens, win, lose, or draw.
Imagine this. For a pro, a losing trade just isn't a big emotional event. There's no panic, no anger, no second guessing. They just close the trade, take the small, planned loss, and move on to the next opportunity. Why? Because they already accepted that losing was a possible outcome before they ever even got in the trade.
Okay, so this brings us to the final piece of the puzzle. The one skill that ties everything together and lets you finally bridge that psychological gap for good and find that consistency we're all looking for.
Just think for a second about every trading mistake you've ever made. Jumping in too soon, hesitating and missing the move, holding on to a loser for way too long. Well, the book argues that a whopping 95% of those errors come from just 4 things: the fear of being wrong, the fear of losing money, that classic FOMO, the fear of missing out, and yeah, even the fear of leaving money on the table.
So, this really puts every trader at a crossroads. You've basically got 2 paths you can take. Path number 1 is what most people do. They fall into what the book calls the black hole of analysis, this endless, exhausting search for a perfect system that will eliminate risk. It doesn't exist. Or there's path number 2. You stop trying to control the uncontrollable market and you start working on the one thing you can control, your own mind.
Because here's the thing, the market isn't out to get you. It's not your opponent. It isn't trying to make you lose. It's just a mirror, a giant, perfectly neutral mirror that simply reflects your own state of mind right back at you. The real road to success isn't about conquering the market, it's about mastering yourself. Because when you finally learn to truly accept the risk, you get rid of the fear. And only then can you finally trust yourself to do what you know you need to do, over and over again.
Welcome to The Explainer. Today, we're diving into a really fascinating paradox: trading, right? It promises absolute freedom, but for something like 90% of people who try it, it just leads to failure. So why is that? Well, the answer isn't out there in the market. It's actually inside our own heads. We're going to unpack that inner game, that hidden mental battle that really decides who wins and who loses. And let's just start with this quote because it absolutely nails the core appeal. You know, the biggest lure of trading isn't just about the money, it's the promise of freedom. We're talking absolute, total freedom. In the trading world, you are the boss. You call all the shots: when to get in, when to get out, how much to risk. It's like a blank canvas. But as we're about to see, that incredible, wide-open freedom, well, it's also a trap. So here it is, this central question we're going to tear apart today. If you have complete and total freedom to succeed, why does it so often end in financial disaster? Why does an environment with 0 external rules cause so many people to, financially self-destruct? Well, as we're about to find out, the problem isn't the market. The problem is us. To really get to the bottom of this, we've got a 5-part roadmap. First, we'll dive deeper into this freedom paradox. Then, we're going to dig into something you probably weren't expecting: your childhood programming. From there, we'll pinpoint 3 specific self-destructive bugs this programming creates in our brains. We'll tackle the illusion of control that trips up even the smartest people. And finally, we'll get to the only real solution: how to build your own internal rules. All right, let's kick things off with part 1, the freedom paradox. We really need to get our heads around why the very thing that pulls us into trading is also the exact thing that makes it so incredibly dangerous. Just think about it for a second. Your job, your relationships, even the sports you play for fun, they've all got rules, right? They have structure. The market has none of that. Our source material puts it perfectly. The market is like a river that's just always flowing, with no clear start, middle, or end. And in that river, you are completely 100% on your own. And this slide just lays it all out, doesn't it? The massive gap between the promise and the reality. On one side, you have the dream that gets us hooked, limitless freedom. And on the other, the nightmare that happens to most people, self-sabotage and failure. But why? Because that total lack of outside structure is exactly what brings our deepest psychological flaws bubbling to the surface. To put it bluntly, we're just not wired to handle it. So if we're not wired for it, where does this problem even begin? Well, this tendency to fail isn't just random bad luck. It actually starts way before we ever place our first trade. It's rooted in the mental software that gets installed in us from the day we're born, our childhood programming. I want you to think back to when you were a little kid. From day one, there's this huge conflict going on. Society, meaning our parents, our teachers, it needs structure to work. It has to impose rules and boundaries. But as kids, what do we want? The exact opposite. We've got this powerful, natural drive for curiosity, for exploration, for just expressing ourselves freely. We are literally born wanting to figure things out for ourselves. And this conflict leads to a really key concept from our source material, the denied impulse. The absolute best way to understand this is with a simple story that pretty much all of us have lived through in some way, the story of the toddler and the vase. So imagine this little kid, right? His natural impulse is just to explore, to understand this new, shiny object. His entire being is focused on that vase. He crawls all the way across the room, pulls himself up, and reaches out to touch it. And in that one critical moment, bam, an outside force screams no. And just like that, his natural, curiosity-driven impulse is shut down. It's denied. This creates what the source calls an upset, an internal imbalance that leads to frustration and real emotional pain. Now, that whole vase story, that's just one single moment. But let's think about the snowball effect here. By the time we hit adulthood, say at 18 years old, we have been on this planet for over 6,500 days. And across those thousands of days, how many times have we heard, no, you can't do that, or stop, you have to do it my way? We're talking about thousands upon thousands of these denied impulses. All these little moments where our natural desire to just explore and express ourselves got blocked. So where does all that pent-up, frustrated energy go? It doesn't just disappear. All those unresolved impulses, they build up inside us for years. They create this hidden well of anger, and this is the most important part for a trader, a powerful, subconscious resistance to any kind of rule that feels like it's taking away our freedom. Okay, so how does all this childhood baggage actually pop up when we sit down to trade? Well, this old programming shows up as 3 specific self-destructive bugs in our mental software, and these bugs are more than capable of completely crashing our trading accounts. Now, these bugs, they're a direct result of that lifetime of denied impulses. The first is a subconscious resistance to making any rules for ourselves. The second is a really sneaky way we avoid taking responsibility. And the third is a very dangerous addiction to random rewards. Let's break each of these down. This first bug is a huge irony. We are drawn to trading because we see it as this utopia of freedom, right? So the moment we realize that to actually succeed, we have to create our own rules, things like stop losses, position sizing, a solid trading plan, our subconscious mind just totally rebels. It feels exactly like the kind of restriction we've been running from our entire lives. So creating that structure you need to survive becomes this massive internal fight. And that leads us right into the second bug, using randomness as a kind of psychological shield. Just think about it. If you create a really detailed trading plan and it doesn't work out, who's responsible? You are. And that can be pretty painful. So to avoid that pain, a lot of traders just wing it. They operate without a clear plan. They take hot tips. They follow some guru on social media. That way, if a trade actually works, hey, they can take the credit. But if it fails, oh, they can always blame someone or something else. It's the perfect setup for freedom without any of the responsibility. And this one? This might just be the most dangerous bug of them all. The addiction to random rewards. Because here's the thing. When you trade without a plan, sooner or later, you're going to get an unexpected, huge win. And our source explains that when that surprise win hits, it floods your brain with these euphoria-inducing chemicals. It feels absolutely incredible. And that creates a powerful feedback loop, kind of like a slot machine. We get hooked on chasing that feeling, which just reinforces the exact random behavior that guarantees we're going to lose everything in the long run. This experiment with monkeys just illustrates the point perfectly. Look, if you give a monkey a treat every single time it pulls a lever and then you suddenly stop, the monkey quits almost right away. But If you give it a treat on a completely random schedule where it has no idea when the next one is coming, that monkey will pull that lever over and over and over again indefinitely. That right there is the addictive power of random reinforcement, and it is the exact psychological trap that the undisciplined trader falls right into. This brings us to our fourth big idea, the illusion of control. Have you ever wondered why so many highly successful people, we're talking doctors, lawyers, business owners, why they fail so miserably at trading? It's because the very skills that made them successful out there in the structured world are completely useless in the market. As our source calls it, trading is a psychological wilderness where it's truly every man or woman for themselves. Out there in the real world, success often comes from imposing your will on your environment. Managing people, controlling situations, making things go according to your plan. None of that works in the market. The market could not care less about what you want it to do. The only things you can ever control are internal. How you perceive the market, how you interpret the information it gives you, and most importantly, how you behave in response to it. The fundamental shift every single trader has to make is from trying to control the world to finally learning to control themselves. And that leads us to the final and most crucial point. If the market gives us zero external structure, and our own psychology is wired to fight against internal structure, then what in the world is the solution? Well, the only way forward is to consciously, deliberately, and with great effort, build the mental discipline that our own minds are programmed to resist. And this right here is the ultimate question every trader has to answer for themselves. The market is a totally boundaryless environment. It will not protect you from yourself. In fact, it will happily let you lose every single penny you have. The only safeguards that will ever exist are the ones you build and the ones you enforce. It's about consciously creating your own mental framework, a set of personal rules, and then finding the discipline to follow them, no matter what your emotions are screaming at you to do. It's about turning these ideas into real action. So I'll just leave you with this thought. The market has no rules to protect you. What are yours?
Welcome to The Explainer. Today, we're digging into one of the most powerful ideas from Mark Douglas's legendary book, Trading in the Zone. Honestly, this is the one mental shift that really explains why so many traders fail and how that tiny group of elite performers manages to win consistently. It all boils down to one thing: taking responsibility.
All right, so here's our roadmap. We're going to follow the classic journey of a trader. First up, the beginner's illusion, that amazing feeling when winning seems way too easy. Then, bam, we hit the pain of loss, which sends us right into the knowledge trap. From there, we'll see how this whole cycle creates three kinds of traders: the winners, the losers, and the busters. And then finally, we'll get to the good stuff, the two huge concepts that can break you out of that cycle for good: the power of responsibility and the idea that the market is your mirror.
So let's start at the very beginning with the brand new trader. And here's the crazy irony of it all. They actually start their career closer to the perfect trading mindset than they'll probably be for years to come. And it all kicks off with a few super easy wins.
Just imagine it for a second. You put on a trade, boom, it works. You do it again, it works again. You start to feel like you've cracked the code, like you're some kind of genius. You're completely fearless, and that lack of fear puts you in this incredible mental state, this effortless flow that top athletes and performers spend their whole lives trying to get back to.
But here's the big twist from Douglas. That zone you're in, it feels like you're a skilled master, but you're not. It's just a byproduct of never having felt the real emotional punch of a big loss. Our new trader isn't a genius. They're just not scared. Yet.
And that, right there, is the danger. That's the trap. Because you can absolutely have a string of winning trades with zero skill. Our novice trader thinks their luck is actually talent. And this sets them up with a completely wrong idea about how trading works, one that's about to lead them straight into a disaster.
And yeah, that beautiful illusion is about to get completely shattered. Because sooner or later, the market's going to do what the market does. The winning streak comes to a screeching halt, and our novice trader takes their first major, gut-wrenching loss. And just like that, that incredible carefree feeling, it's gone. Poof. It's replaced by this wave of pain, frustration, and total confusion. And what's our first very human instinct when we're in pain? We desperately need to find something or someone to blame.
And this is where the real psychological damage starts. The trader starts pointing fingers. They don't think of the loss as, a business expense or just part of the game. Oh no, they feel personally attacked.
They start to see the market, this completely neutral thing, as a villain that's actively out to get them and ruin their day.
Okay, so now our trader has an enemy, the market. And what do you do when you have an enemy? You try to outsmart it, right? So they come to what seems like a logical conclusion. I just need more knowledge. I need more indicators, more analysis, more strategies to beat this thing.
And this, right here, this is the trap. This is the vicious cycle. Now, get this straight. Learning isn't the problem. Of course not. It's the reason for learning that's the problem. They're not trying to become a better trader. They're trying to find a way to never feel pain again, to get revenge on the market. And that deep-seated need to be right is the very thing that guarantees they'll keep on losing.
It's such a paradox, isn't it? The more they learn, the more they expect the market to be predictable and perfect. And when it inevitably isn't, the emotional crash is even worse than before. So they just keep going around and around in this cycle until one of two things happens. They either quit, totally disgusted and broke, or they have a breakthrough and realize the problem was never the market.
So, after going through this whole miserable cycle of pain and learning for all the wrong reasons, traders tend to fall into one of three buckets. And these groups aren't defined by how smart they are or what they know, they're defined purely by their results.
Now, take a look at these numbers, because this might surprise you. That elite group of consistent winners, it's tiny, maybe 10%. But look at the biggest group. You'd think it'd be the consistent losers, right? Nope. It's the boom and busters, the traders who go on these incredible highs followed by absolutely devastating lows.
So, what's the difference? Well, think about their account balance over time. The winners have a nice smooth curve going up. The losers have a sad smooth curve going down. But the boom and busters? Their chart looks like a Six Flags roller coaster. They know how to make money, they can go on incredible runs, but they always give it back. Why? Because they're trapped by two huge psychological forces that only show up when they start winning.
On one shoulder, you've got euphoria. After a big win streak, the trader feels like a god. They feel invincible. They think they can't lose, so they throw their rules out the window and take on huge, reckless risk. And on the other shoulder, you've got self-sabotage. This is a bit sneakier. It comes from these deep-down beliefs that maybe they don't really deserve the money, so they start making dumb mistakes, like hitting sell instead of buy. In the end, both of these forces lead to the exact same place, a catastrophic bust that completely wipes out all their progress.
So this all sounds pretty bleak, right? How in the world do you break out of this cycle? How do you escape that boom and bust roller coaster and join that tiny 10% club? Well, the answer isn't a new indicator or a secret strategy. It's one single massive shift in your mindset. And here it is, the big secret. You have to take absolute 100% responsibility. But hold on, because Douglas has a very specific definition for this. It does not mean you're responsible for what the market does. That's totally out of your control. What it does mean is that you are responsible for everything else, for how you see the market, for the decisions you make, and for the actions you take. You are the source of your results. Period.
The difference this makes is just profound. It's like night and day. When you're blaming the market, you're basically in a boxing match with an opponent that doesn't even know you exist. But the moment you take responsibility, you put the gloves down. You stop fighting. You finally realize the problem isn't out there. It's in here. It's your perspective. And that's when you can actually start to learn and grow, because you're finally working on the right problem.
Now, this whole journey of taking responsibility, it all leads to what I think is the most powerful idea in the entire book. It's a concept that completely flips your relationship with the market on its head, turning it from an enemy into your greatest teacher.
Just let that sink in for a second. The market isn't doing anything to you. It has zero power over how you feel. It's just a mirror. If you feel confident and focused, it's not because the market gave you money. It's because your beliefs are lined up with reality. And if you feel angry, scared, and frustrated, it's not because the market took your money. It's because you still believe the market is responsible for how you feel. The market is just showing you what's already inside of you.
And that's why it all comes back to responsibility. It is the absolute first, non-negotiable step. Because if you don't believe that you are the source of your outcomes, then you have no reason to change anything about yourself. You'll just keep pointing at the mirror, yelling at your own reflection, and getting the same painful results over and over again.
And that's the big, provocative question mark Douglas leaves us with. Your trading statement, your equity curve, it's not just a bunch of numbers. It's a psychological profile. It's a mirror. So the question isn't, what did the market do to me? The real question is,
What are my results telling me about what's going on inside my own head? What does your mirror show you?
Hey, welcome to our explainer. Today, we are tackling a massive topic for anyone involved in the markets: consistency. We often think success is all about finding that one perfect strategy or that magic indicator. But what if I told you that what really separates the best from the rest isn't what they do, but how they think? The secret to consistency, it turns out, isn't in the market at all. It's a state of mind. All right, so here's our game plan. We're going to start with this weird contradiction that every single trader runs into. Then we'll look inside our own minds to find out where the real problem is. After that, we're going to completely redefine what risk means, uncover the professional's true edge, and then finally, we'll get into how you can start to get your own mind right. So first up is what we're calling the trader's paradox. And this is all about that universal struggle, that feeling, and I think you know the one, that trading should be simple, but somehow it stays incredibly difficult. It's this contradiction that's right at the heart of the whole experience. Seriously, I want you to stop and think about this for a second. Why is trading so easy and yet so ridiculously hard to master? I mean, you've totally been there, right? You've had those moments, maybe a winning streak, where everything just clicks. The money's just flowing in and it feels completely effortless. You think, yes, I finally cracked the code. But then, just as fast, that feeling is gone. And this slide, wow, it just nails the split personality of trading, doesn't it? Over on the left, you've got that amazing high of a winning streak. It's easy, it's effortless, you feel like a genius. But on the right, that's the crushing reality of inconsistency, where the exact same strategies that just worked suddenly don't, and you're left pulling your hair out. See, this isn't a strategy problem. At its core, it's a consistency problem. So this leads us to the big question, right? How do we explain this massive gap? The gap between that direct experience of how easy trading can feel and the frustrating roller coaster results we so often get? Well, the answer, and this might sound a little crazy, has almost nothing to do with the markets. The answer is inside your head. Okay, so that brings us to the real battlefield. And it's not you versus the S&P 500, it's you versus you. The real source of all our inconsistency isn't out there somewhere. It's an internal battle we're all fighting against our own mental programming. This is the single most important idea we have to start with. The solutions are in your mind. Think about it. You can't try to be happy, right? You just are. Well, it's the same thing with consistency. Consistency is a state of mind. It's just a natural byproduct of having the right beliefs and attitudes. The traders who are truly consistent, they don't have to try. They just are. It's a natural expression of who they've become. And this right here, this just perfectly shows the difference in mindset. So many of us, when we start out, we're in this mode of trying to get something from the market. We have these expectations, and that perspective immediately creates a struggle. It triggers our mental defenses. But the pros, they do something totally different. They just make themselves available to whatever the market is offering. And that puts them in this opportunity flow, where their actions feel effortless and all their trading knowledge is just there. So what's actually happening under the hood when you're in that get mode? Well, you're kicking off a subconscious fear cycle. It starts with an expectation, and when the market inevitably does something you don't want, your brain perceives it as a threat. So your mind, trying to be your buddy, kicks in these defense mechanisms to protect you from the emotional pain of being wrong. And what's the result? You end up filtering reality, you miss opportunities, and you make the exact errors you were trying so desperately to avoid. And get this isn't just some minor issue. That constant threat of pain generates fear. And that fear is the root cause of something like 95%. 95% of all the trading errors you're ever going to make. It is, without a doubt, the single biggest obstacle standing between you and the consistency you want. Wow. Okay, that sounds pretty bleak, doesn't it? But, and this is a big but, there is a way out. There's a way to neutralize this fear and end that internal battle for good. And it all comes down to one single concept that can change everything. Seriously, this is the turning point right here. The answer, in all its, I guess, beautiful simplicity, is this. You have to learn to truly accept the risk. Now, I can almost hear you through the screen. I'm a trader. Of course I accept the risk. I do it on every trade. But what most of us don't realize is that we fundamentally misunderstand what this actually means. See, truly accepting the risk isn't about the mechanical act of clicking buy or sell. It means accepting every possible outcome of your trade, being wrong, losing money, missing out on a bigger move, without that knot in your stomach, without that fear. It means that none of those possibilities has the power to trigger your mental defenses and yank you out of that opportunity flow. Okay, to really make this idea stick, let me tell you a quick story from the book this is based on. There was a trader who had a deep, paralyzing fear of snakes. I mean, we're talking a full-on phobia he'd had his whole life. And to him, this fear was so real, so absolute, he just assumed everyone else felt the exact same way. His reality was the reality. But then one day, something happens that just shatters his reality. He's at a friend's house, and his 3-year-old daughter sees a pet snake for the first time. He's about to freak out, but he looks at his daughter, and she was completely mesmerized. No fear at all, just pure, childlike fascination. He was just floored, not by the snake, but by her reaction. And right there, that's the whole point. The fear wasn't in the snake. The fear was in him. His daughter, with no negative beliefs or bad experiences tied to snakes, was living in a completely different reality. It's the exact same thing with the market. The market isn't inherently scary or threatening. The fear we feel is a product of our own internal beliefs and experiences. All right, so with that story in mind, let's talk about the professional mindset, because this is where it all clicks into place. We're about to debunk some of the biggest myths about what makes top traders so good at what they do. You know, we have this image in our heads of what a top trader is like, right? They must have nerves of steel. They've got this superhuman courage, or they just have this iron will and self-control that lets them power through the fear. But here's the absolute truth, the secret sauce, if you will. The best traders don't need any of those things. It's because they're not trying to manage their fear. They've created a mental environment where fear doesn't even show up to the party. Needing courage means there's a battle to fight. The pros aren't fighting. They've already changed the entire battlefield. And this is their logic. It's actually a super simple step-by-step process. First, they truly accept the risk. They accept that anything can happen. And because of that, nothing the market does is perceived as a threat. Well, if there's no threat, then there's nothing to be afraid of. And if there's no fear, what on earth do you need courage or nerves of steel for? You don't. The internal struggle is just gone. Okay, so that all sounds great, right? But how in the world do we actually do this? How do we go from being terrified of the snake to seeing it with pure fascination? This last part is all about how to start aligning your own internal mental environment so it functions like a professional's. I absolutely love this analogy from the source material. It says to think of your mind, your whole belief system, as if it's software code. Now, you could have thousands of lines of perfectly written code, but just one single flawed line, one conflicting belief can corrupt the entire system and just crash the whole program. And this gets to a really important distinction, the difference between just being aware of something and having it be a core functional belief. The guy in the story, he was aware that not all snakes are dangerous. He could agree with that intellectually. But a functional belief? That's actually reaching out and touching the snake without your heart pounding out of your chest. In trading, you can be aware you need to accept risk, but until that concept is a functional part of you, fear will still be running the show. And that brings us to our final thought for today, inspired by that classic movie, Cool Hand Luke. In the movie, the prison warden keeps asking Luke, "Have you got your mind right yet?" And just like Luke, so many traders try to fight the market, try to force it to give them what they want, and they just get wrecked, emotionally and financially. The truth is, there are easier, way more satisfying ways to trade. But it all starts with the one question you have to ask yourself. Are you willing to get your mind right? All right, let's dive right in. Today, we are going to tackle a question that haunts every single one of us in the markets, drawing from the absolute classic, trading in the zone. And that question is, why do sometimes look at a chart and see a world of risk, while someone else sees pure, unadulterated opportunity? Let's figure it out. I mean, seriously, think about it. Have you ever had this happen? You spot a perfect A+ setup. One week you're on it, no hesitation, click, done. But the very next week, you see the exact same pattern and you're frozen, paralyzed with fear. The market signal didn't change, so what did? Well, the answer isn't out there on the charts. It's right between your ears. And this right here, this is the core idea, the whole game. The market is completely neutral. It's just data. It just spits out information, a constant stream of ups and downs. The happiness, the pain, the fear, the euphoria, all of that stuff is generated by us internally. Your own mental framework is the filter that colors absolutely everything you see. So our first big idea is understanding this really powerful concept. The market is essentially a mirror. It's not projecting anything onto you. It's just reflecting what you're already holding inside your own mind. This is where it gets really interesting. You've got pros and amateurs looking at the exact same charts, the same price action, the same news. The information is identical. So what's the difference? It's the internal perception. One sees an endless flow of probabilities, a game to be played. The other sees a battlefield full of personal threats. The information is totally neutral. The perception of it is everything. Okay, so how does this perception actually work? How does our brain create these different realities? Well, the source material gives us this fascinating concept to explain it all, something called your mind's structured energy. On the most basic level, everything you experience is just external information, right? What you see, what you hear, it's all data from the outside world. Your nervous system is this amazing conversion machine that takes all that external data and transforms it into electrical signals, which then become a form of energy inside your own mental environment. Now, this internal energy isn't just a random jumble. It gets organized. It gets structured. All your memories of past wins and losses, your beliefs about how the market should act, all the patterns you've learned, these things exist in your mind as structured energy. You can think of it like software code that's running in the background. You can't physically touch it, but man, it has an undeniable force that directs your actions. And if this idea of structured energy sounds a little out there, just think about these examples. They show that non-physical things can have a very definite structure, right? Your thoughts are organized by language. A random sound wave becomes a structured message when someone speaks. Even a dream feels incredibly real, even though it has no physical form. It's the same exact principle at work with your trading beliefs. But here's the kicker. This mental energy isn't neutral. It has a charge, just like a battery. You've got positively charged energy, which we feel as confidence, joy, that feeling of being in the zone. It's that high after a big winning streak. And then there's negatively charged energy. That's the stuff we feel as fear, anxiety, and that gut-wrenching sense of threat. And these two forces are constantly battling to shape our perception. Now, to make this all crystal clear, the source gives us a truly brilliant analogy. So to get this, we have to forget about trading for just a minute. We're going to talk about a little kid and two very, very different dogs. Okay, picture this. A little kid sees a dog for the first time. He's curious, a blank slate, right? But this dog attacks him. Bam! That trauma creates this powerful, negatively charged memory in his mind. Now later on, he sees a completely different dog, a friendly one, tail wagging, the whole deal. But his mind, it doesn't see a new dog. It automatically makes an association. Dog equals the pain from that first memory, and then, and this is the crazy part, his mind projects that internal fear onto the new dog, making it look dangerous. The kid is terrified, and he's 100% convinced that this friendly dog is the cause of his terror. And this leads us to this critical psychological idea, projection. It's an unconscious process where you take what you're feeling on the inside, in this case, fear from a stored memory, and you actually experience it as if it's a real quality of the thing you're looking at in the outside world. So let's be super clear here. The feeling of terror that little boy had, it was absolutely 100% real. He wasn't faking it. But the source of that terror, the actual threat, it wasn't there. It was an illusion, a ghost from his past. His entire terrifying experience was generated from the inside out. Okay, now let's take that powerful analogy and bring it right back to the trading screen, because we're about to see how this exact same mental mechanism creates both the crippling fear that makes you hesitate and the reckless overconfidence that makes you blow up your account. So what on earth does a scared kid have to do with your profit and loss statement? Well, everything. That unconscious automatic process of association and projection is running in your mind every single time you look at a potential trade. Just look at this side-by-side comparison. It tells the entire story. On the left, you've just taken 3 losses in a row. Your mind is soaked in negative energy, fear, regret. The next trade signal pops up. Your brain instantly associates that signal with the pain of your recent losses. You project that pain onto the signal, and suddenly it looks insanely risky. So you hesitate. Now flip the script. You're coming off 3 huge wins. You feel like a genius. Your mind is flooded with positive energy, with euphoria. The same exact signal appears, but now your brain links it to the incredible feeling of winning. You project that confidence onto the signal, and it looks like a can't-miss, risk-free opportunity. You go all in. And here is the most critical point of this entire explainer. In both of those scenarios, how many signals did the market actually generate? Just one. One objective, neutral piece of information. The market was just being the market. It didn't get riskier. It didn't get safer. It had no idea you just had a winning streak or a losing streak. Your perception of risk wasn't based on the market's reality at all. It was a projection of your own internal reality. You weren't trading the market. You were trading your mind's reaction to your recent past. So if our minds are just wired to do this automatically, are we just stuck? Doomed to be puppets of our last trade? Not at all. The final step, and this is what separates the pros, is understanding how to gain conscious control over this powerful automatic association machine. This is the golden question. This is the question every trader has to learn to ask themselves in that critical moment of decision. When you feel that surge of fear or that wave of euphoria, you have to learn to pause and ask, is this feeling coming from the market itself, or is the market just acting as a mirror for my own internal state? This is the real work. This is the path to becoming a consistent trader. It's not about finding some perfect, magical indicator. It's about understanding and mastering your own mental software. The goal is to short-circuit that automatic link between a neutral signal and past pain or euphoria. And that lets you see the now-moment opportunity for exactly what it is. And we're going to end on this thought. Just like all the opportunities on a chart are invisible to someone who's never learned how to read one, and just like the friendly nature of that second dog was completely invisible to the scared child, what opportunities is the market presenting to you right now that you literally cannot see? Not because they aren't there, but because the negatively or positively charged code from your past won't let you see them. Thinking about that, that's the first step to changing everything.
Have you ever wondered what really, truly separates the best traders from everybody else? I mean, it's not some secret indicator they've got or a faster computer. Today, we're going to dive deep into the psychology of trading, pulling from the amazing work of Mark Douglas to help us unlock the market's perspective.
All right, so here's the game plan. We're going to kick things off by looking at the huge psychological gap between your average trader and the pros. Then we'll get into the one core secret they all live by. We'll break down what the market really is, walk through a seriously powerful real-world story, and then wrap it all up by figuring out how to embrace the unknown to completely change our own trading.
Okay, this first part gets right to the heart of it. This is where so much of the frustration and fear and, the expensive mistakes really come from. It all boils down to a fundamental difference in how we see the market, a difference that, thankfully, can be fixed.
I mean, this right here really shows the emotional roller coaster that most of us are on, right? You have a couple of losing trades, and suddenly the next one feels impossibly risky. You get hesitant, you second-guess everything, but then you have a few winners, and suddenly you feel like a genius. You feel invincible, which is when you get reckless. The best traders, though, they have managed to completely cut that emotional cord. For them, the last trade has zero, and I mean zero impact on this one. Every single moment is brand new.
Now, here's a really crucial point. If you're stuck in that cycle of fear after a loss or euphoria after a win, it's not because you're a bad trader. It's not a personal flaw. It's just how our brains are wired. We crave certainty. But the good news is you can overcome it. The solution is all about training your mind to let go of the past, stop worrying about the future, and just stay locked in on what the market is offering you in this exact moment.
So the big question is, how? How do the best traders actually do this? How do they get to that place of calm, objective focus? Well, it all comes down to installing one powerful core belief into their minds. A belief that the source calls the absolute foundation of all trading success.
And listen, this is not just some clever little phrase. This is the absolute core of the elite trading mindset. It means you deeply, truly, 100% accept that you do not know what is going to happen next, even if you have a statistical edge. You have to be completely at peace with not knowing. That belief, right there, is the tool that lets you trade without fear and lets you actually see what the market is doing, not what you hope it's doing. This quote just nails the depth of it. For them, this isn't just some idea they agree with. It's so deeply ingrained, it's like their mental operating system. It's the thing that automatically stops their brains from connecting this trade with the last trade. You could say it's the ultimate circuit breaker for that whole cycle of fear and euphoria we were talking about.
So when you truly internalize that anything can happen, you free yourself from this toxic need to be right all the time. And that mental freedom is the real prize. It's what lets you stay objective, to see the market for what it is, and to be ready and available to act on opportunities that a fearful or an overconfident mind would just completely miss or totally mess up.
Okay, let's keep building on this. Because to really buy into this belief system, you have to understand why it works. It's not just some psychological trick, it's a reflection of reality. And to get that, we need to break down what the market actually is. You know, it's easy to think of the market as this big, all-knowing entity. But it's not. It's just a collection of millions of people all over the world acting on their own unique beliefs and feelings about what's high and what's low. Every single tick you see on a chart, that's just a footprint of human psychology in action. So here's the key point. What we call market behavior is really just a giant, constant tug of war between two groups of people with opposite beliefs. When one side's conviction and their money is stronger than the other side's, boom, the price moves. It's actually that simple.
So you've got the buyers and you've got the sellers. But then there's this third absolutely massive force. All the potential traders, just sitting on the sidelines. They're the wild card. They could jump into the market at any moment for any reason and completely change the game. And since anyone from anywhere in the world can be one of these players, the potential for what the market can do is, well, literally limitless.
And this leads to a really critical question we have to ask ourselves. I mean, if the price is just about what people believe and how much money they have, what are the actual limits? What can stop it?
And that is the cold, hard truth of trading. The answer is basically nothing. It doesn't matter how perfect your chart looks or how certain you feel about your analysis. All it takes is one other person out there with enough conviction and enough money to step in and make your entire idea completely worthless in an instant.
Now, to really burn this idea into our brains, the source gives us this incredible real-world story, and it is a masterclass in market humility.
So get this. You have this analyst who is brilliant, just one of the best. He's done his homework, he's using a proven system, and he's so confident that he doesn't say, "I think this is the low." He states it as a fact, an undeniable, established fact. But his boss, the chairman, who's been in the game for 40 years and has seen it all, he knows something the analyst's charts can't possibly show him. He knows that in the market, there are no facts about the future. And so, he decides it's time to teach a little lesson, a permanent one. That's it. One phone call. With that one simple action, the chairman became that one trader we were just talking about. He just injected a brand new, powerful, and completely unpredictable variable into the market, himself. 30 seconds. That's all it took. In less time than it takes to read this, the analyst's absolute low, his fact, just vanished. It evaporated. The market didn't even slow down. It just sliced right through his support level because a bigger, unknown force had just entered the game. And that's the punchline of the whole story. Your analysis, no matter how good it is, exists in a bubble. It's just a theory until it collides with the chaotic reality of the live market. You can never, ever know what everyone else is thinking, what they believe, or how much firepower they have. Anyone can do anything at any time.
Okay, so what's the big takeaway here? How do we actually use this pretty stark realization to trade better? Well, it all comes down to acting like someone who genuinely knows that they don't know what's going to happen next.
This right here, this sums up the entire psychological game of trading. The average trader operates from a place of, "I know I'm right." And if you think you're right, why would you feel a deep need to protect yourself? But the elite trader's edge comes from the total opposite belief. "I know I could be wrong." And because of that, they always, without exception, account for the unexpected. And this is maybe the most important insight of all. These 3 rules, they're not just good habits you read in a book. They are the logical, unavoidable results of truly believing that anything can happen. If you genuinely accept that uncertainty, you have no other choice but to do these things. It just becomes the only rational way to behave in an environment that you know you cannot control.
So, in the end, it really seems that long-term success has less to do with perfecting your market analysis and way more to do with rewiring your own mind to think in probabilities. Accepting uncertainty isn't just a defensive move, it's the very foundation that consistent profitability is built on. And that whole process starts by looking in the mirror and honestly answering this final critical question.
All right, so let's dive into this really powerful idea from Mark Douglas's book, Trading in the Zone. This is the stuff that separates the people who are consistently profitable from, well, pretty much everyone else. And it's not just about trading. This applies to any field where you have to make big decisions with incomplete information. So think about this for a second. It's a huge paradox, right? You've got casinos, which run games that are totally random, yet they make billions with rock-solid consistency. Then you have most traders, who look at a market they're convinced is predictable, and their results are all over the place. Unraveling this puzzle is the key to mastering how you make decisions under pressure.
So here's our game plan. First, we're going to define the core problem, this paradox. Then we'll head to Las Vegas, metaphorically speaking, to uncover the casino's winning secret. After that, we'll see how to apply that exact same logic to trading. We'll explore the psychological traps that make this so hard. And finally, we'll build a brand new mental framework for success based on 5 simple, powerful truths.
Okay, let's start with that central contradiction. The paradox that just messes with so many traders' heads and makes consistent success feel like a pipe dream.
I mean, look at this. It's completely backward from what you'd expect, isn't it? You'd think that a predictable environment would give you consistent results, and a random one would give you random results. But in the real world, it's the total opposite. The casino embraces randomness and builds an empire on it, while the average trader's desperate hunt for certainty is what leads them straight to inconsistency.
So how in the world does the casino pull this off? How do they build these massive billion-dollar hotels based on events that, by their very nature, are unpredictable one by one? Well, the secret isn't some crystal ball. It's all about mastering the numbers game.
You know, the casino's edge is actually surprisingly small. In a game like blackjack, we're talking about just 4.5%. Now, that is not a guarantee they'll win every hand or even every hour. It's just a tiny statistical lean in their favor over the long run.
And this is where the magic happens. You take that small edge and you apply it over and over and over again across a massive sample size. The casino doesn't need to win big on any single hand. They just need to keep the games running, knowing that their small mathematical advantage is going to inevitably turn into enormous, predictable profits.
The whole secret really hinges on this one concept: statistical independence. It just means that the outcome of the last hand of blackjack has absolutely zero, zilch, nada influence on the next one. They are totally separate, unique events. And guess what? It's exactly the same with your trades. The market has no memory. It doesn't know you, and it certainly doesn't care about your last win or loss.
So this is the mental gymnastics that the pros have mastered. They hold 2 ideas in their head at the exact same time that seem to contradict each other. On the micro level, the single hand, the single trade, they fully accept that the outcome is totally uncertain. You just don't know. But on the macro level, over a huge series of trades, they have total, unwavering faith that their edge is going to produce a predictable, positive result.
Okay, so let's take this casino mindset and drop it right into the world of trading, because you're about to see that the underlying mechanics are pretty much identical.
Think about it this way. In gambling, your known variables, your edge, are the rules of the game. In trading, your knowns are your tools, your patterns, your setups. That's your edge. But in both worlds, the unknown variables are the same: other people. In a casino, it's how other players are going to bet. In the market, it's how every other trader on the planet is going to act on their own beliefs and fears.
And this is why every single moment in the market is unique. You might see a chart pattern that looks exactly like one from last week, but the collection of human beings creating that pattern is different. It only takes one trader somewhere in the world with a big enough order to do something different and completely change the outcome. That means every single trade is a roll of the dice. It's a probabilistic event, not a sure thing.
So if the logic is really that simple, why is it so ridiculously hard for most people to actually do it? Well, the roadblock isn't about intelligence. It's 100% psychological. Our brains, quite frankly, are just not wired to think this way naturally.
And this right here, this gets to the absolute root of the problem. For most people, trading isn't just about the bottom line. It's about the ego. It's about being right. They're desperate for the feeling of certainty that their analysis is correct, but that certainty just doesn't exist in the markets. And that psychological need to be right is the source of almost every single trading mistake you can make.
It always starts like this.
doesn't it? A trader sees a setup that looks familiar, one that perfectly confirms what they already believe. They see what they want to see, and that's when the emotional train of conviction starts leaving the station.
And then they leap from just observing to being certain. They convince themselves, oh yeah, this one is a sure thing. They start projecting their hopes and desires for what they want to happen onto the market's future.
And boom, this is the fatal mistake. If you truly believe you know what's going to happen next, if you are convinced you can't possibly lose, then why would you bother defining your risk? Planning for failure seems like a waste of time if you're certain failure isn't an option. This is exactly where all discipline goes right out the window.
You see, when you have this intense need to be right, your own brain's pain avoidance system becomes your biggest enemy. To protect your ego from the pain of being wrong, it will literally make you blind to information that contradicts your trade. You'll start ignoring stop signals, you'll rationalize a losing position, all because your ego just can't handle the truth of what the market is actually telling you.
So to beat this self-sabotage, we have to basically rewire our brains. We need to throw out our old, flawed beliefs and install a new mental operating system, a toolkit built on 5 fundamental truths about how the market really works. These 5 truths, this is the whole game. Let's just quickly walk through them. Number 1, anything can happen. If you really truly believe that, you will always define your risk. Number 2, you don't need to know what's next to make money. Whew. This frees you from trying to predict the future. Number 3, wins and losses are randomly distributed. This stops you from getting cocky after a few wins or depressed after a few losses. Number 4, an edge is just a higher probability. It is not a guarantee. And finally, number 5, every moment is unique. This stops you from falling into the trap of thinking, well, it worked last time, so it has to work this time. Truly internalizing these 5 truths is how you get your mind in sync with reality.
So what's the end result of all this? What happens when you really adopt this mindset? It's not about becoming a heartless robot. It's about achieving a state of mental freedom, where you can just execute your plan without fear, without hesitation, and without regret.
And check out this total flip. The amateur is super flexible with their rules. They're always bending them to fit what they want to happen. But they are totally rigid in their expectations, and they get furious when the market doesn't do what they want. The professional, they do the exact opposite. They are absolutely rock solid, rigid with their rules, which builds self-trust, but they are completely flexible in what they expect to happen. They are ready to accept whatever the market gives them.
And this, right here, is the end goal, a carefree state of mind, one that's present, focused, and objective. When you really get this probabilistic mindset, a losing trade is no longer some personal failure that triggers every time you were told you were wrong as a kid. It just becomes what it is, a simple business expense. It's the cost of doing business. It's the price you pay to find out what works.
In the end, every single decision you make when the pressure's on comes down to this one question. Are you letting your ego scream for certainty in a world where there is none, or are you acting like the casino, calmly, consistently playing your edge and trusting that over time, the probabilities will take care of everything else? The answer to that question will define your success.
Welcome to The Explainer. Today we're going to get right into the head of a trader. Ever wonder why being consistent is so darn hard? Well, it turns out the secret isn't about outsmarting the market, but about mastering your own beliefs. And that's exactly what we're going to unpack. All right, here's what we've got on tap. We're going to kick things off with a big mental paradox that messes with traders. Then we'll figure out where all that fear really comes from. After that, we'll reset our goals and talk about what consistency actually looks like. We'll arm you with 5 fundamental truths to build your mindset on. And finally, we'll talk about the Holy Grail, getting into the zone. Okay, let's dive into our first section. This is all about the big battle, the one that happens between your brain and the market. You know, so many traders think their strategy is the problem, but the real struggle? It's a total mismatch between how we're built to think and how the market actually, well, is. So, here's the absolute heart of the problem. On one hand, you've got your brain. It's a prediction machine, right? It's literally hardwired to find patterns, to create certainty, to figure out what's coming next. That's how we've survived. But then you have the market, and its reality is the complete opposite. It's pure, total uncertainty. Every single outcome is basically random, and the future is completely unknowable. I mean, at its most basic level, what is the market? It's just a series of up and down ticks. That's it. But our brains look at that and immediately start searching for patterns. We call them edges, right? Things that suggest there's a higher chance of one thing happening over another. But, and this is the key, The people, the traders, creating any given pattern are always different. So even if a setup looks exactly the same as one you saw last week, its outcome is totally random compared to that last one. It's a whole new ballgame every single time.
Okay, so if the market itself is just neutral, just information, then where does all that fear come from? You know, the hesitation, the impulse buys, all those mistakes that cost us money. Well, the answer is probably not what you're expecting. It's an inside job. So, what's the real source of our trading fears? The answer, and this might be a shock, is that it's not the market. The market has zero power over you. It can't make you feel anything. Not fear, not greed, nothing. Those up and down ticks you see on the screen, they're just data. They aren't good or bad. They're totally neutral. They can't reach out and force you to feel a certain way.
See, the whole problem starts and ends inside our own minds. It's like a chain reaction. First, the market just does its thing. It spits out neutral information. Then we see that information and we run it through our own personal filter of beliefs and expectations. Step 3, that interpretation is what actually triggers the emotion, the fear, the confidence, whatever it is. And here's the really tricky part. Our state of mind, that feeling, feels like the absolute undeniable truth. So when we feel fear, we believe the market is scary, even if our belief is totally off base.
Here's a great way to think about it. The boy and the dog analogy. Imagine a little boy gets bitten by a dog. Bam! His mind instantly creates a belief. All dogs are dangerous. Now, from that moment on, every dog he sees, even the fluffiest, friendliest puppy, triggers real, genuine fear. But is that new puppy the source of the fear? No. The fear is coming from his internal belief, a belief that was cemented by one single bad experience. As traders, we do this all the time. One really bad trade can create a belief that makes us see danger everywhere in the market, even when it's not there. And this really gets to the heart of it. Emotional pain is what happens when the world outside doesn't match what we believe or expect to be true. When we expect a trade to work out, to prove us right, and then it doesn't, we feel pain. We see that neutral market information as a threat, but the market's not threatening us, it's just doing its thing, and it's not living up to our expectations. Once you get this, it totally flips the script on what our goal should be. See, the real goal isn't about making money, it's about mindset. If you want to be consistent, you have to stop focusing on the money from one trade and start focusing on achieving a specific state of mind. Get the mindset right, and the profits, they'll follow. It's a byproduct, not the primary objective. So what does this ideal state of mind look like? Well, first, it's about being carefree. And no, that doesn't mean being reckless. It means you're confident, but not euphoric. You don't feel any fear or hesitation because you've completely 100% accepted the risk of the trade. You are truly at peace with any outcome, win or lose. When you get there, fear has nowhere to hide. Next up is the skill of objectivity. This means you have conscious access to everything you've learned about the market. Nothing is getting blocked or twisted by your mind's defense mechanisms. You know, that fear of repeating a past loss or the greed from a big win, that's all gone. Your view is crystal clear. And the final piece of the approach is making yourself available. What does that mean? It means you show up with nothing to prove. You're not trying to be a hero, you're not trying to avoid a loss, and you're definitely not trying to get revenge on the market. You're just there. You're open, and you're ready to take whatever opportunities the market decides to offer you in this exact moment. Okay, so that all sounds great, right? But how do we actually get there? The answer lies in building a new belief system for trading based on 5 fundamental truths. These aren't just ideas. You have to work to make them your core beliefs. They are the bedrock of a winning mindset. All right, here they are, the 5 fundamental truths. 1, anything can happen. 2, you don't need to know what's next to make money. 3, wins and losses are randomly distributed. 4, an edge is just a probability. And 5, every moment in the market is unique. These 5 ideas work together to basically build a mental shield, one that protects you from all that emotional pain because it aligns your expectations with reality. So let's look at the first 2 together. Embrace uncertainty. First, anything can happen. Seriously, it just takes one trader somewhere in the world to completely invalidate your perfect setup. No exceptions. Second, you don't need to know what's next. Trading is a numbers game, a game of probabilities. If your edge works 60% of the time, who cares if this specific trade is a winner? You don't need a crystal ball. When you really get these 2, the market can't make you feel wrong anymore. Now, truth number 3 is a total game changer. There is a random distribution between wins and losses. Think about it. Your edge might give you a series of wins and losses over the long run, but it says absolutely nothing about the order they'll show up in. You could have a win, then 2 losses, then another win. You just don't know. If you truly believe this, then every loss stops being this big, painful failure. It's just part of the sequence, and it actually means you're just one trade closer to the next win. And finally, truths 4 and 5 are all about trusting your edge and staying in the moment. An edge is just a probability. That means when your edge shows up, you take the trade. You don't go looking for extra confirmation or reasons to doubt it. That just adds randomness and messes up your results. Then, every moment is unique. This belief is so powerful because it stops your brain from linking what's happening right now to some painful trade from your past. It keeps you objective and focused on the present. So, let's move toward the final goal. What happens when you really truly internalize these 5 truths, when they become part of how you see the market? Well, that's when the magic happens. That's when you start moving toward the zone. This timeline really lays it all out beautifully. It all starts when you accept the realities of the market, those 5 truths. That allows you to fully accept the risk of any trade. Once you accept the risk, you stop defining market information as painful or threatening. With that fear gone, your mind stops blocking or distorting what you see. And that's how you finally enter the zone. And that's the destination. Being in the zone is simply being at peace with not knowing what's going to happen next. You're tapped into the flow of the market in this present moment, and you can act without any hesitation at all. So, I want to leave you with one big question to think about. Are you trading the market, or are you trading your beliefs about the market? The path to becoming a consistent trader, it turns out, isn't about finding a better indicator on a chart. It's about a better understanding of yourself. Hey there, and welcome. Today, we're diving deep into one of the most powerful and, often invisible forces that shapes our entire lives, our beliefs. We're going to deconstruct how they're formed, how they secretly control us, and most importantly, how we can start to control them. So let's just jump right in with a question that I think we've all asked ourselves at some point. You read a great book, you have this amazing breakthrough insight, you know what you should be doing, and yet you just don't do it. Why? Why is there this huge, frustrating gap between knowing something and actually doing it? And here's the core of it, really. We kind of mistakenly believe that once we understand something with our intellect, it just, magically rewires our behavior. But a new understanding, well, that's just the first step. It's not an automatic software update for your brain. And this brings us right to our first section, the knowing-doing gap. We're going to explore the hidden forces that keep us stuck. And you'll see it all comes down to these deep, often invisible conflicts that are happening inside our own minds. It's such a common trap to fall into. We get that aha moment of clarity, and we think, great, the work is done. But here's the problem. If that new insight clashes with a belief we've held for years, a belief we've backed up with our time, our money, our energy, well, the old belief is almost always going to win out. It's going to sabotage our best intentions every single time. And this really gets to a core idea here. Our brain's default settings, they're not built for objectivity. Staying present and seeing things as they are, those aren't natural states for us. They are skills. They require deliberate, active training to overcome the incredible magnetic pull of our old, ingrained beliefs. So if beliefs are that powerful, what are they actually made of? Where do they come from? Let's pull back the curtain and really deconstruct the architecture of a belief, right down to its origin story. Okay, so everything starts with something we can call pure memory. Now, think of an infant's mind for a second. Experiences like the warmth of a hug or the sound of a parent's voice, they're stored as raw sensory data. There are no words, no labels, just the pure, unfiltered feeling of the experience itself. And this is the crucial next step. On one side, you've got that raw, pure memory, the feeling. On the other side, you have a concept, which is basically language. A belief is born in the exact moment we connect the two. That raw feeling of being nurtured gets linked up with the words, life is wonderful. And there it is, the simple but incredibly profound formula. You take a raw feeling from an experience, you link it to a set of words or a concept, and boom, you have a belief. See, it's not just a thought anymore. It's a thought that has been supercharged with feeling. This brings us to a more formal definition.
A belief isn't just an idea floating around. It's structured energy. It's a concept about how the world works that's been charged with the energy from our past experiences. And because it's energized, it doesn't just feel like an opinion. It feels like the absolute, undeniable truth. Now, once a belief is formed, it doesn't just sit there quietly. Oh no, it becomes an active filter that shapes absolutely everything. So in this next section, we're going to see exactly how these beliefs secretly control our world, and we're going to use a fascinating real-world story to do it. But before we get to the story, you've got to understand this four-step process our beliefs use to run the show. First, they filter your perception. Then, they set your expectations. Based on those expectations, they guide your behavior. And finally, they totally dictate your feeling about the whole outcome. So remember that. Perception, expectation, behavior, feeling. Now let's see it in action. Okay, picture this. It comes from a TV show called Gotcha Chicago. They put a man on a really busy, upscale street corner holding a sign that just read, "Free money today only." And he had a big wad of cash with simple instructions. Give it to anyone who asks. So here you have this incredible, genuine opportunity being presented to hundreds, maybe even thousands of people just walking by. A chance to get free money, absolutely no strings attached. What do you think happened? This is where it gets totally bizarre. Out of all those people, only a single person stopped to ask for a quarter for a bus transfer. Everyone else actively avoided the man. They wouldn't even walk near him. So the million-dollar question is, why? And this is where we see that four-step process just play out perfectly, all driven by one single powerful belief. There's no such thing as free money. First, perception. The sign can't possibly be real, so that man must be crazy. This creates an expectation. If he's crazy, he's probably dangerous. That expectation drives a behavior. I should walk way over there and keep my distance. And what's the resulting feeling? It's not disappointment for missing out on free cash, but relief for having avoided what they thought was a threat. So here's the crucial point, the big takeaway from this story. Their belief didn't just color their experience, it literally created a different reality for them. In their reality, there was no opportunity, there was only a crazy person to be avoided. The money was physically there, but for them, because of their belief, it was completely and utterly invisible. I mean, this story forces us to confront a really huge idea. If our beliefs can stop us from seeing what is literally right in front of our faces, how can we ever know what's truly real? So let's move into our final section and explore a much more functional and, I think, powerful way of thinking about truth. This leads to a really profound, maybe even intimidating philosophical question, right? If we all live inside our own little bubble of belief, filtering the world through our own personal lenses, what does the word truth even mean? Can any of us ever really access objective reality? Well, here's a brilliant logical framework to help us out. First, we just have to accept that reality is infinitely complex. Second, we have to recognize that any belief we hold is, by definition, just a tiny, limited slice of that huge reality. Third, and this is key, if our beliefs were perfectly aligned with reality, we'd always get what we expect, and we'd be perpetually satisfied. Which leads to this powerful final point. Any feeling of dissatisfaction or frustration is a direct signal that our beliefs are out of sync with what's actually possible. And this right here is the paradigm shift. Truth gets redefined. It's not something absolute or dogmatic. It's something functional. The truth is simply whatever belief allows you to navigate reality effectively and achieve what you're trying to do. It's all about usefulness, not absolute correctness. So let's reframe this whole thing. Let's stop thinking of our beliefs as these sacred, unchangeable statements about the world. Let's start thinking of them as tools in a toolbox. Some tools are perfect for the job you're doing. Others are old, rusty, or just plain wrong for the task at hand. And really, the only question that matters is this belief working for me? Is it producing the results I want in my life? And so this is the final thought I really want to leave you with. When you look at your own life, your career, your health, your relationships, your goals, take a moment to really examine the underlying beliefs that are driving your perceptions and your actions. And ask yourself, which of them are useful tools helping you build the life you truly want, and which of them have become cages, limiting what you can even see as possible?
Welcome to The Explainer. Today, we're digging into the powerful and often totally invisible forces that shape our reality, especially in high-stakes arenas like trading. We are talking about our beliefs.
I mean, think about it for a second. Why are we so incredibly quick to argue for our own viewpoints? Why do we defend them so fiercely? Every single conflict, whether it's a tiny disagreement or a massive global issue, really just boils down to a clash of beliefs. There's got to be something about the nature of belief itself that makes us willing to fight for it, like it's a living thing.
Well, the source material we're looking at today offers a pretty wild theory. It suggests that a belief isn't just some passive thought floating around in your head. It's actually structured, conscious energy. It's aware of itself. It actively seeks out things that confirm its own existence, and it fights off anything that contradicts it. It's almost alive.
Okay, so let's dive into this. We're going to start by exploring why our beliefs feel so alive. Then we'll get into the 3 fundamental rules that they all seem to follow. From there, we'll look at how you can possibly change a belief that you can't destroy, see how this all plays out in the pressure cooker world of trading, and finally, look at how you can spot the invisible barriers your own beliefs might be building around you.
So first up, this idea that beliefs are living energy. Now, that might sound a little out there, but when you really stop and look at how we behave, the evidence is actually pretty compelling.
I mean, these feelings are totally universal, right? It doesn't matter what you believe in. When someone agrees with you, it feels good, and when they disagree, it feels bad. If someone challenges a really core belief of yours, it doesn't just feel like a simple debate, does it? No, it feels like a personal attack. This is exactly why we tend to hang out with people who see the world the same way we do. It's comfortable. It's safe. It's our beliefs seeking reinforcement and avoiding threats.
Okay, so if beliefs kind of act like they're alive, how do they actually operate? Well, it turns out they aren't random at all. They seem to follow 3 very specific, very predictable rules that are constantly shaping our reality from behind the scenes.
And these 3 rules right here, they're the key to understanding everything. First, beliefs will fight back against any force that tries to change them. Second, they absolutely demand to be expressed, to be let out. And third, most of their work happens subconsciously, just running in the background, guiding our actions without us even thinking about it. Getting a handle on this framework is so crucial if you want to understand how your own mind might be running the show.
That first rule, that beliefs resist force, is just incredibly powerful. I mean, people have literally died for their beliefs throughout history. Trying to attack a belief head-on is like trying to destroy energy. Physics tells us energy can't be destroyed, right? It can only be transformed. Well, it's the same with the belief. When it's threatened, it doesn't just vanish. It defends itself, and a lot of the time it just comes back even stronger.
And we've all been there with the second rule. You're sitting in a meeting, maybe with your boss, and you completely disagree with what they're saying, but you can't say anything, so you just nod along. But what's happening inside your head? Your mind is screaming, right? It's arguing every single point. That's the belief demanding to be heard. And what's the very first thing you do when you leave that meeting? You find a friend, a coworker, anyone so you can finally unload. That's the belief finally getting its expression.
And number 3, they work subconsciously. It's just like driving a car. After a while, you don't have to consciously think about every little thing. Checking the mirrors, pressing the pedals, steering. It just becomes automatic. Beliefs are exactly the same. You don't walk around actively thinking, I believe this, for that belief to be filtering everything you see and guiding every action you take. It's just part of your mental operating system, always running in the background.
Okay, so here's the big question. If beliefs resist force, and you can't just destroy them, how on earth is it possible to ever change your mind? Well, this is where things get really fascinating. The secret isn't destruction, it's deactivation. Let's use the perfect example, the belief in Santa Claus. Think back to when you were 5 years old. That belief was charged up with a ton of positive energy. The second you heard Santa is here, it created this unstoppable excitement. You had to go see. Now, fast forward to today. If someone tells you Santa's at the door, you'll probably laugh, right? You'd assume it's a joke. So what happened? The belief itself wasn't destroyed. The concept of Santa still exists in your mind. The difference is, all the energy has been completely drained out of it, making it inactive.
So here's the crucial takeaway. Change isn't about fighting or killing off your old beliefs. It's about systematically and consciously pulling the energy out of a belief that isn't helping you anymore and transferring that energy into a new, more useful concept, one that's actually aligned with your goals. You're basically rechanneling your own mental energy.
And this whole idea of rechanneling energy brings us right to the heart of the conflict for so many traders, and really for all of us. It's that internal battle between what we consciously want and what our deeply energized beliefs will actually let us do.
Our source gives us a really great story to illustrate this. Imagine a little boy who has a really scary experience with a dog. His mind instantly forms a belief: all dogs are dangerous. Now, this isn't just a casual thought. This belief is supercharged with fear, and it completely dictates his behavior. He makes sure to avoid all dogs because his belief is trying to protect him. But then one day he sees something that totally contradicts his reality. He sees other kids playing with dogs, and they're laughing, having a great time, totally safe. His mind is just thrown into chaos. He's seeing undeniable proof that his belief isn't 100% true, and this creates a new feeling, a desire. He wants to have fun like them.
So now he has two conflicting forces battling it outside him. On one side, you've got his deep-seated, highly energized belief that's fueled by intense fear. On the other side, you've got this new, very weakly energized desire. What he does next isn't going to be determined by logic. It's going to be determined by whichever force has more energy. And right now, that fear is way, way stronger. He might want to pet the dog, but he'll probably find himself completely frozen.
This boy's dilemma is the exact same dilemma that traders face every single day. A trader might know, intellectually, that any given trade is just a matter of probabilities. But if they have a deeper, highly energized belief, maybe a belief that they just cannot take another loss, or that the market is personally out to get them, that belief is packed with fear, and that's the energy that causes them to hesitate, to break their own rules, and to make emotional mistakes.
The source material has a perfect name for this: an active contradiction. It's that moment when you have the new knowledge, you know the right thing to do, but that knowledge just doesn't have enough energy yet to overpower the old conflicting belief. This explains that incredibly frustrating feeling of knowing exactly what you should be doing, but finding yourself completely unable to do it.
And this brings us to the final, and frankly the most profound piece of this entire puzzle: the subconscious beliefs that we all carry around, the ones that act as invisible barriers and sabotage our own success.
Pretty much nobody gets through childhood without picking up a few of these. You know, a parent might say something offhand like, "Well, this wouldn't have happened if you didn't deserve it." Or maybe you internalize a sense of guilt and come to believe that bad people should be punished, not rewarded. These ideas become these energized beliefs about our own self-worth that we might totally forget about, but they just keep running on a subconscious level.
For a trader, you can literally see this play out on their equity curve. They might have an amazing run for a few months. Their account goes from 10,000 to 25,000, they hit 50,000, and then bam, a huge sudden drawdown that seems to come out of nowhere. It's almost as if a subconscious belief about how much money they feel they truly deserve just kicks in and forces them to self-sabotage their own success.
So what's the solution? The good news is, the goal isn't to become some psychologically perfect person or to spend years hunting down every single negative belief you've ever had. That's impossible. The real key is to simply become aware that they exist, to learn to recognize their patterns when they start popping up in your behavior, and then to build specific strategies into your routine to actively compensate for their influence.
And look, this goes so far beyond trading. This applies to any area of your life where you feel stuck, where you feel like you keep hitting the same invisible wall over and over again. So the question I want to leave you with is this: what do you truly, deep down, believe you deserve? And how might that energized, living belief be quietly and invisibly shaping your entire world?
All right, welcome. Today we are diving deep into one of the biggest frustrations in trading. Why is something that seems so simple on paper so incredibly difficult to do in real life? We're going to break down Mark Douglas's classic, Trading in the Zone, to give you a real, actionable plan for rewiring your brain to finally think, act, and win like a pro.
So here's our game plan. We'll kick things off with the big problem, the trader's paradox. Then we'll walk through the stages of mastery, zero in on the 7 core principles you need, and then get into a powerful exercise to build that winning mindset. Let's get into it. Okay, first up, let's tackle this central conflict head on. You can have the most brilliant trading strategy in the world, a system with a proven edge, but if your own mind is fighting against you, you're going to have a bad time. Let's dig into why that is. This quote from the book just nails it, doesn't it? On the surface, what we do is simple. We spot a pattern, we figure out our risk, we decide where we're going to take profit. The trade works or it doesn't. We move on. But the hard part isn't the intellectual side of things. In fact, sometimes the more you think you know, the worse you do. The real skill is getting comfortable operating in a state of not having to know what's going to happen next. And this right here is the absolute heart of the matter. The market, it's neutral. It doesn't care about you or your position. It's just an endless stream of opportunities. The real war is the one happening between your ears. To win consistently, you have to completely overhaul your mental environment, shifting away from fear, from euphoria, from that desperate need to be right, and moving towards seeing the market as just a game of probabilities. So the big question is, how do you actually make that mental shift? It's not like you can just flip a switch. Well, Mark Douglas lays out a really clear path, a journey that pretty much every single successful trader has to go on. Let's look at the 3 stages of that journey. Every top trader goes through these 3 stages. First up is the mechanical stage. This is all about rigid, pure discipline to build that rock-solid foundation. After that, you graduate to the subjective stage, where you can start using your skills with a bit more freedom. And the final destination? The intuitive stage. That's the black belt level, where you just feel the market. But here's the thing. You can't skip ahead. Our entire focus today is on mastering stage 1, because without it, stages 2 and 3 are just a pipe dream. So let's be crystal clear about the purpose of this mechanical stage. It is not about making money. Let me say that again. It's not about the money. It's about building skill. Your only goal is to systematically root out all those emotional mistakes that are wrecking your performance, and in their place, build a foundation for true, lasting consistency. These are your new goals. And notice something? They are all internal skills. We're talking about building unshakable trust in yourself, learning to execute your plan without any hesitation. And the big one, fundamentally retraining your brain to think in probabilities. You're learning to think like the casino, not the gambler pulling the lever. Now, to get there, you're going to need self-discipline, but it's really important we understand what that actually is. It is not some personality trait you're either born with or you're not. Think of it as a mental tool. It's a technique you consciously pick up and use to pull your focus back to your goal whenever your old, unhelpful beliefs start screaming at you and trying to drag you off course. It's the tool you use to change. Let me tell you a great story from the book that makes this crystal clear. After years of not really being active, the author Mark Douglas decided, you know what? I want to be a runner. Great goal. The only problem was his body hadn't gotten the memo. He was so out of shape he could barely run 50 yards before getting totally winded. He was just crushed. And when he tried to get started, his mind just flooded with all these conflicting thoughts. All the excuses. Sound familiar? It's that same little voice a trader hears when they know they should cut a loss but just can't bring themselves to click the mouse. His desire to be a runner was in a head-on collision with his current reality. So what did he do? He came up with a simple mechanical rule. Every single time he went out, he just had to run 1 step farther than the last time. That was it. By forcing himself to follow that rule over and over, despite all the internal noise telling him not to, he was literally transferring energy away from those old beliefs and pouring it into a new one. I'm a runner. And eventually, all that resistance just faded away because that new belief became who he was. So we're going to do that exact same thing, but for trading. Just like he built the belief I am a runner, our job is to build the belief I am a consistent winner. And to do that, we need to install a set of core principles into our brains until they are completely automatic. These 7 principles, this is your new identity. This isn't a checklist of things to try to do. This is a description of who you are as a trader. Look at number 4. I act on my edges without reservation or hesitation. That's about conquering fear. Or number 5, I pay myself as the market makes money available to me. That's how you beat the greed that turns a great trade into a loser. The entire point of the mechanical stage is to integrate these beliefs so deeply that they become your default setting. Okay, so knowing these principles is one thing. Actually living them when your money is on the line, that's the real challenge. So this is where we get practical. The book lays out a very specific step-by-step exercise to turn these principles from nice ideas into how your brain actually works. The goal of this exercise is a total mind shift. We want to stop being the gambler at the slot machine, riding that emotional roller coaster up and down with every single trade. Instead, we're going to become the casino, the house. The casino doesn't sweat any single spin of the roulette wheel, right? Of course not. It just knows the odds are in its favor over time, so its job is to be there for every single spin to let that edge play out. That's the mindset we're building. So first things first, we set up the game. This has to be a rigid, purely mechanical system. Pick one market to focus on. Then, define your edge, the exact market conditions that give you an advantage, with rules that are completely precise. No gray areas. No I think or it feels like. If the rules are met, you trade. Period. And your risk, your stop loss, is always predefined by the market structure. Next, you need a predetermined plan for taking profits. We're going to use a scaling out strategy, which is a game changer psychologically. And then, and this is maybe the most important rule of the whole thing, you must commit to trading in sample sizes, not trade by trade. This is the key to shifting your perspective to the casino mindset. You have to commit to a specific number of trades, and that number is 20. 20 trades. This is the absolute heart of the exercise. You have to promise yourself you will execute your system perfectly without any deviation for a minimum of 20 trades. Now, why 20? Is it a magic number? Not really, but it's long enough to actually test your edge. And more importantly, it's long enough to force you to face every single one of your conflicting beliefs about winning, losing, and being wrong. Now, one of the coolest things this exercise does is it creates what Douglas calls a risk-free opportunity. You get this by scaling out of your winning trades. By taking some profit off the table and moving your stop to break even, you create a situation where you literally cannot lose money on that trade anymore. And this lets you experience something most traders never do, what it feels like to be in a trade with a totally relaxed, carefree mind. Let's look at a quick example of how powerful this is. Say you're in a trade and you take 1/3 of your position off at the first target. Bam! Instantly, your anxiety drops because your risk just got slashed. Then, at the next target, you sell another third and move your stop on that last piece to your entry price. You are now in a risk-free opportunity. No matter what happens, you've already locked in a win. This completely changes the emotional game and lets you manage that last part of the trade like a stone-cold professional. But before you even think about starting this, you have to ask yourself a brutally honest question. Why are you really doing this? Is it for the adrenaline rush? Is it for the ego boost of being right? If those are your real drivers, they are going to sabotage you. For this exercise to work, your desire to become a consistent trader has to be stronger than any of those other motivations. So, let's bring this all home. This exercise, this whole process, it isn't about testing if your system makes money. It's about testing you. It's a mental workout designed to build psychological muscle that you currently might not have. At the end of the day, consistency in trading has absolutely nothing to do with luck. It is a skill. And just like any other high-level skill, it takes deliberate, focused practice. The path we've just laid out is your training plan. You are literally rewiring your brain to operate like a professional, one trade at a time. The path is right there in front of you. The only real question left is, will you do the work?